and we've had another break over here, right? So we've seen the market shift bearish, right? We've seen the market shift bearish. We've had a bearish shift of market structure just over here. Now, I just want to make people aware that this low was weak because this low didn't take out the old high. The old local 4-hour high was here. This low failed to do so. So now we've had a confirmed shift of our market structure, right? Because if you look to the left, price is making new highs. But now price is broken once and broken again. So we've had a confirmed shift of the market structure, as you can see from this very, very basic kind of head and shoulders market structure. Now, why do I still keep a bullish bias? Now, this is where we go into ICT concepts even further, right? This is where we really begin to dive into ICT concepts. Notice how we have a bunch of liquidity that's forming over here. We've got massive trendline liquidity, as well as our daily fair value gap, and price will gravitate towards daily fair value gaps. Yes, we have a daily fair value gap down here. And yes, we also have a massive pool of sell side liquidity, but we also have a massive pool of buy side liquidity. So you may be asking Price Action Labs, how do I know whether price is going to target here? Or how do you know price is going to target here? Well, I don't know for sure, but this is where market structure becomes very, very valuable, right? So again, let's analyze the most recent dealing range, right? So now that we've gone through dealing range and we've gone through liquidity, let's understand the most recent dealing range we are currently in, right? So we have a structure high over here and we have a structure low down here. And now price is pretty close to the equilibrium, which means that we could see some choppiness. But again, we have a fair value gap up here. We got a very small kind of POI, but we have a fair value gap or an inefficiency over here to fill. This is a fair value gap. So we could see price trade higher before ultimately heading lower, because yes, we do have a daily zone over here. But if you remember from the daily time frame, our overall narrative was to take out this POI, then eventually this weekly POI over here. So the narrative is actually bullish, right? The narrative is actually bullish. Now, you need to be careful with this, right? Because when price does get into this premium, you need to be careful that we don't see a reversal, because price is at a bearish fair value. Yet price is in a premium before our premium. So it's well within its rights to continue. But if we do see price violate this local 4-hour high, this can then be used as a demand or a support to then continue higher. So this is my kind of thesis for GBP/JPY. Also, quickly, if we look to the left, right, this kind of area, this kind of bullish push over here hasn't come off any major fair value gaps, right? Over here, the price is pretty efficient. We haven't got too many fair value gaps, right? So this could simply be a sweep of liquidity. We are Tuesday going on to Wednesday, so we could see that low of the week, that weekly due to swing before it move higher. But overall, you can see how we're using all the different concepts of liquidity, of PD arrays, of dealing range, basic market structure to form an overall high time frame bias. And yes, I'm going to answer the questions. This can be used on any forex pair, any crypto market, futures, indices, gold, even any country stock market. When you can understand basic structure and pair it with fair value gaps and basic liquidity, there's no reason why you can't sieve out a high time frame bias in pretty much any market. And if you follow these simple steps, these mechanical processes of structure, dealing range, PD arrays, and fair value gaps, you should see a massive increase in your confidence. You should see a massive increase in your strike rate. And when you have a good strike rate with good confidence, your psychology will naturally improve. So the lesson I want you to take away, other than the technicals, is to start treating trading like a mechanical process. Start treating it in terms of having a system and following the system, and naturally your confidence and strike rate will improve. And then that will then lead to an improvement in your psychology. So don't chase psychology, chase excellence in the process, and a good psychology will follow. On that note, I am offering one-to-one sessions to help people strategize this in their own market, in their own way, in their own style, in their own time frame, in their own market. So for those who are interested, the link will be in the bio. Look forward to hearing from you soon, and take care.